There you go, Dr. Milliner.
Thank you. Good afternoon, everyone. Welcome to the West End Opportunity Partnership Board meeting for November 27th, 2023. Hope everyone had an amazing Thanksgiving holiday. I know I did. It was peaceful, so that was good. If we could go ahead and have our roll call, that would be greatly appreciated.
Okay, can everyone hear me?
Yes.
Sharon Allen. J. Michael Brown. Alicia Burns.
Here.
Dr. Douglas Craddock.
Here.
Dr. Douglas Craddock.
Here, he's here.
Okay, I've got my screen up. I couldn't hear him either. I mean, I've got my sheet up. Okay. Gina Dunlap. Jennifer Hancock. Tammy Hawkins. Keith L. Jackson. Jessica Jackson.
He's here.
Jessica Jackson.
She is here. She's shown, she's on the screen.
Jessica, I'm going to ask her to unmute. Let me continue. Jennifer just said she can't find her link. So Jessica Jackson. Jessica, I'm going to have to mark you absent, unless you're having technical difficulties, if you can send me a text. Darlene Johnson Jones.
Here.
Dr. Gabriel Jones.
I'm here.
Dr. Mary Milliner.
Here.
Michael Nagel.
Here.
Lyndon Pryor.
Here.
Christopher Romaine.
Present.
Desmond Smith Jr. William Summers.
Here.
Dr. Don Wade. Gary Williams. Monique Quarterman, proxy for Secretary Jeff Noel.
Present.
O'Brien. Jeff O'Brien. Okay, I see you. All right, we have a quorum.
Thank you.
All right, thank you very much.
Jennifer, thank you for your patience.
All right, so that brings us to the approval of the October 23rd board meeting. The minutes were sent out. Is there anyone that has any questions, comments, or concerns at this particular moment? Having no questions, comments, or concerns, the minutes are approved as stated. Is that right? Did I do that right? Yay, go me. All right. Next on our agenda, we have our interim president and CEO report from Ms. Laura Douglas.
Good afternoon, everyone, and thanks for your indulgence as we've tried to do an online meeting. I know it's been challenging, but thank you for being present. I just want to preview a bit what you'll be hearing today. There's been lots of work going on during the past month. Rita and I have continued our process of going around and talking to funders to thank them for their support and to give them an idea of what lays on the horizon for us. Next week, we will be meeting with the West End Funders, a group of philanthropists and organizations that typically fund organizations serving West Louisville. This is our second appearance before them this year, and they simply want to be brought up to date, and we're looking forward to that. Each of your standing committees today is going to be bringing forward some robust ideas for you to review and to consider. The Development Committee has some information that they want to share with you, and you'll have the opportunity to vote on one nominee for a board position, and then to get an update from Jennifer on where we stand concerning the other board seats. The Community Development, the Communications Committee, rather, under Dr. Dawn Wade, when she arrives, she'll be talking about where we are on the website. She has identified a vendor, and she wants to talk with you about that vendor today. Given the dollar amount that we will be spending on the vendor, no board approval is required, but it would be helpful if each of you has in front of you from Dr. Wade's report her outline of why she picked this person, what the expectations are, etc. So you'll know exactly where we are. Our Community Engagement Committee has been meeting, and they have started the process of identifying hosts for our 9 neighborhood meetings. So Gabe is going to roll that out for you today. And there may be other information that we want to share with you regarding what's coming up with the community engagement group. But this is the critical part of what our work will be going into the first quarter of 2024. And then finally, the Finance Committee has its usual update for you. As we finish up our last scheduled meeting for the year, one thing for everyone to be thinking about is our schedule of meetings next year. We are hopeful that we can meet once every 2 months rather than once a month. And of course, those committees that will be actively engaged with the Community Engagement Committee specifically, it's likely that they're going to have to be meeting many, many times between the board meetings. But in any event, the new schedule or proposed new schedule for board meetings will be presented to you next year, not today. But thank you for your attention, and I hope that I hope that you'll stay engaged in the meeting, and we'll be able to answer all the questions that you may have regarding the items presented.
Thank you, Ms. Douglas.
All right.
That brings us to our committee updates. And first we have Ms. Jennifer Hancock with the Board Development.
Good afternoon, everyone, and I apologize for being tardy to our meeting. I know you were doing roll call when I hopped on, so I do want to make sure, Rita, you capture me as here but late. I want to give you some updates from our Board Development Committee. We have been meeting recently to determine our way forward. As a reminder, in light of the 4 open seats on our board today, 2 that are up for renewal, and that's the Republic Bank seat, which we're ready to request action on this evening, as well as the NAACP seat. In addition to that, we have 2 seats previously held by the Federal Reserve Bank, as well as the seat representing a local foundation. As a reminder, we now have the ability to broaden our scope, and as such, we have agreed that we would fill a seat for a financial institution and for a seat that we'll broadly describe as philanthropy. In regard to the financial institution seat, we do have one prospect that has recently come to our attention that we're very eager to pursue. We are seeking a second prospect. So if you have suggestions, and we have received a couple that we will be vetting, at such time we have 2 prospects for that seat, we'll convene our board development committee to interview those 2 prospects, minimally of 2 prospects, before making a recommendation to this board. Likewise, we have the Community Foundation of Louisville for the philanthropy seat that we will soon be engaging to determine their interest in supplying 1 or 2 candidates for our consideration. So we're not ready to take action on those at this time, but we are still in the process of pursuing candidates for consideration. Of the 2 seats that are up for renewal at this time, we have indicated to the NAACP that we are putting that decision in abeyance until such time they provide an additional candidate. At this time, they've only provided 1 nominee for consideration. So we've communicated that we're still seeking that minimum of 2 nominees and believe we will be hearing back from them shortly. As a matter of fact, I believe that board at the NAACP is meeting today, and my hope is that I'll hear some feedback later this week. In the meantime, the 4th seat, which is the one that we're ready to take action on this evening, is the seat up for renewal from Republic Bank. We received 2 fantastic nominees, one of whom is William Summers, who has served this board, including as our treasurer. And he and another colleague from Republic were nominated. Our board development committee convened last week, and following our new process to consider a minimum of 2 candidates, we interviewed both and unanimously have selected William Summers to continue serving this board. So that's coming out of the board development committee as a recommendation this evening, that we re-elect William Summers to this board. And I'll pause there and see if you have any questions or feedback for us. Okay, so that is a motion coming out of the board development committee that we re-elect William Summers to his final term serving this board, which is a 4-year term.
Dr. Milliner, would you lead the board in a vote on that motion from the committee?
Sorry. Thank you. So do all in favor of William Summers the 5th being re-elected to the board seat, say aye.
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 All opposed? The motion is carried.
Yeah, and we'll need to show Mr. Summers as abstaining.
Yeah, I abstained. I didn't vote.
Sorry.
I appreciate it though.
Congratulations, sir.
Yes,
Thanks.
thank you. And I want to say on behalf of the board development committee that the candidates provided from Republic Bank were just extraordinary in their own right. We particularly believe that given our stage of maturity and William's engagement on our board, that from a continuity standpoint, given the leadership role that he's played, that we want to thank you, William, for your service to this board. And we're just delighted that you're willing to continue your service for the next 4 years. And thank you so much.
Well, thank you. And like I said, we got a lot of work to do and I'm excited to be a part of it.
Thank you. That's all I have, Dr. Milliner.
Okay, thank you very much, Ms. Hancock. So that will take us to our communications, and Dr. Wade, she's still not on as of yet.
Yeah, she said that she would be a little late getting on, so we need to move on down the agenda, and I will check with her accordingly. Thank you.
Okay. So we will move then to the community engagement with Dr. Gabe Jones Jr.
Thanks, Dr. M. What's up, everybody? Good to see y'all. So the Community Engagement Committee did meet and has been meeting. And in our most recent meeting, we were joined by many folks on the board who represent their neighborhoods, who aren't necessarily on the community engagement committee. And we spent a lot of time brainstorming and discussing a lot of things about the best path forward for engaging community as we embark on the neighborhood learning sessions or the neighborhood convenings, whatever we might call them. We talked about where it would be best to have those. We talked about the strategic or nuanced differences in the dynamics in each of the different neighborhoods and how that informs our approach and what we need to do and any steps that we need to take in preparation for these community meetings. We didn't walk away from our meeting this time with items to vote on. Somebody correct me if I'm wrong and just forgetting something, but those will be coming shortly once we build out and develop our plan a little bit more. I know that Ms. Douglas in the opening mentioned that we did preliminarily decide on a few, or not decide on, but we had a few neighborhood representatives who proposed locations for convenings in their neighborhoods, but we haven't made any hard selections to bring back to the board yet. If anybody on here who brought forth a place in their neighborhood and you want to share that with the group, I'm open to that because I don't remember all of the places, to be honest. Okay. Guess y'all just have to find out once we ready to vote. I don't think I'm missing anything else, but the last thing I will say is that my man Jeff Knoll was on video a minute ago and he was cruising in style. And I don't know if that was a sunroof or a moonroof, but I need one of them. One of those. And that's all I got.
Gabe, this is Lyndon.
Oh, yes, sir.
did have a
Yeah, I forgot
question.
to ask the questions. My fault.
I know I wasn't at last month's meeting, but the meeting before that, when we talked about community engagement, we talked about you all also engaging in virtual options to allow for as many participants as possible. Is that still the plan?
So I don't think we made any changes. I'm trying to remember. I think we talked about Linda, if you could remind me, when we talked about the virtual options, that was for folks from the neighborhoods to be able to give feedback and potentially to attend simultaneously with the live sessions. Is that correct?
Yes, or you could just do standalone virtual options. But it's just another way to provide access to people who may not be able to get the meetings in person.
Absolutely. So I think we may still actually need to refine that part of the plan a bit more with Dr. Rollins, because I remember he had concerns about how to make sure that we are limiting it to the voices of the people from the neighborhoods. And unless I'm forgetting, I don't know that we have talked with him more about how to do that. I know that was a concern, and I don't think he provided any updates on how to achieve that aim. Am I
You're right.
You're on point.
You're right.
You're on point,
You're
Dr.
right.
Gabe.
Okay.
Yeah, absolutely correct.
But I mean, Lyndon, to your point, because I remember when we were engaging in our community engagement meetings, I brought up the exact same thing. And I think it's just a matter of working through between now and when we begin these, how we can ensure that we are only getting the voice of those that we want to prioritize. And if there are best practices on that, that anybody has, please share those with the community engagement committee, because that is a very, very important thing.
Yeah. So, I mean, my suggestion would be this. I mean, with any web platform, particularly, we use Zoom here, so you can set up a registration where you ask people questions, and part of that could be what zip code or what neighborhood or whatever you want to ask. And so in order to register, they'd have to complete that information, and then you can decide based on that how you let people in. But I'll say this: there's no foolproof way to do it, and I don't think that should be a deterrent to doing it. Quite frankly, there's no foolproof way of doing it. Anybody who shows up in person is going to be necessarily from the neighborhoods, and so it's just going to be something that we deal with. But I would prefer that we err on the side of accessibility rather than restrictions, just to ensure as many people are heard as possible.
Yeah. Yeah. Thank you for sharing that. I think that's good feedback. And I think just the whole concept and thinking around how to make it as inclusive as possible is very important. I do know that in one of our meetings, we talked about the pros and cons of the registration process and how much information can we ask people for, when the whole point of these is for them to get to know us and to build trust with us. So yes, I mean, great ideas. And I think we need to develop that a bit more going forward. Does anybody else? Go ahead, Mike.
On the virtual, I mean, I think that's a good idea, but I think a meeting should be virtual or in person. It shouldn't be hybrid. The hybrid is very difficult to pull off. And I don't think hybrid, nobody feels that included in a hybrid either. I don't know. That's just my opinion, but I think we could do a standalone hybrid. Maybe in addition to, and we'd have to talk to Dr. Rollins about that, or maybe take the 10th meeting, make that a virtual. But you know, I don't think we should try to make all of the in-persons virtual, because it just, in my experience, it doesn't work.
Appreciate that, Mike. Yeah, I think there are several different things that we can do. And even to steal a concept from qualitative research, since this essentially is qualitative research, we could even do in-person sessions and then use virtual sessions after that, essentially as member checking. And that is to validate or verify the findings of the preliminary attempts, and to invite people either back or in addition to the first wave. But those are all things that we will have to discuss in our committee meetings, so we can save time here for the agenda items. Any other questions? Okay, cool. Thank you all.
Thank you, Dr. Gabe. And it looks like we now have Dr. Wade. So we will now turn it back over to the Communications Committee.
Hi everyone, sorry that I'm late. Tech issues today. I know that I wasn't in person last time, and when we last left off, I told you all that we had received another proposal from a diverse vendor, and we wanted to weigh in on what they presented to us. So they did send us over a proposal. It's shared within that Google link that I believe Ms. Rita had shared with you all, or said she would share if you wanted to see it. But what my team and I have done is gone back and, you know, updated the proposal process to incorporate that fifth vendor, the last vendor. I think it was the fourth or fifth one. My numbers are bad. So if you click on slide 2, Ms. Rita, the name of that vendor was MDM Ventures. So yeah, it was the fifth one. So on slide 2 is the review of what they were coming in at. You know, it's a diverse vendor, really nice guy. He has some ties back to Louisville. So we had a good conversation, talked about what we were interested in, and he sent over a proposal. His price was a little bit higher, but it also incorporated some of the extra items that could be, you know, that would be value added. So, you know, it's a fair price based, you know, based upon the offering. His quote didn't include any photography. It also didn't show any examples of his previous work, so that was a little disappointing. He did have a higher annual maintenance fee, which was $3,900 per year. but it gave us some rollover. So there was, you know, some aspects of that could be. So once you kind of like divide that out by 12, it works out from that aspects because it does have the rollover. From that perspective, I wasn't sure that we would necessarily need 5 hours, but he still came in at that point. And then from a timing perspective, it was about 10 to 12 weeks to complete. And his pricing for that amount was $16,000. So when I compared that across the different criteria, on the next slide, you'll see the criteria, just as a refresh with you all, was cost, being minority owned, any Louisville affiliation, meaning the business was in Louisville or conducts business here, any West End affiliation, the timing to complete, nonprofit experience, as well as portfolio expertise was how we ranked it. And then on the following slide, is slide 4, is where he ranked, where his business ranked. So he still came in a little, he came in lower. Although the price was fair, the fact that it wasn't a Louisville affiliation or West End allowed some of the other ones to get a better rating from that perspective. So when you look at it in terms of scores, Honeywick and Mammoth are scored the highest out of all 5 of them. So my recommendation would be that we contact Honeywick and Mammoth and see, because we're a little bit outside of the dates that they gave the proposal, but ask them to refresh. And in the event that everything still lines up, I would recommend Honeywick. In the event that something doesn't line up, then Mammoth would be my second choice, as long as everything lined up with them. And the good thing about both of them, they're Louisville owned businesses. And the thing about Mammoth was that they had a West End affiliation. So that's, and then from a timing perspective, understanding we're now right at December, I would ask them to revisit it, and we would start probably in January with them working to have it ready for testing within 10 to 12 weeks after that point. Any questions?
This is Gabe. I have a quick question, and you may have answered this in the past, and I'm just forgetting. But I'm curious as to, so is the work that they will be doing, or their scope of work, is that already determined? Or will there be an opportunity for committees, for example, to connect with them and let them know about, I don't know, maybe website features that would be useful for community engagement? So for example, we will be talking in our next meeting about ways to refine communication with the community so that we can be rapidly responsive. Are there opportunities to discuss things like that, or is the scope of work already established and what they will be doing done?
The scope that we described to them was giving us an initial website, but allowing it to be agile so that if we needed to add additional components, it needed to be, agile and flexible enough to allow that. And based off of how they're all presenting it, they all would be eligible to do, upgrades from that, regardless of who we were to go with. They're all proposing WordPress sites. So basically it's very easy to update. There are things that, the partnership itself can update, but they will be doing the heavy lifting from that perspective. So they're all able to do that. In terms of what the price of this is, not for any like custom features or anything like that, but they all have the capability to do that based off of what I've seen. I think we would just need to have a conversation and get a quote from them if there was something custom from that perspective. But one of the questions I am going to go back to Honeywick and Mammoth with, if that's what, we choose to go with, is that, for example, a form field, just understanding what that time commitment would be, because I do think that would, even if we don't have it now, I like to be able to add it by the time they're finished with the site.
Thanks. Cool.
And I apologize for that taking so long, but we did really want to be able to have a diverse vendor be able to submit, and it took them a little longer. But I still appreciate, their ability to get us the quote in.
And if there's nothing else for the communications committee, that will bring us to the finance report and our newly re-elected William Summers V.
Thank you. I think everybody got the information as far as when you looked at the cash flows, the balance sheet. The biggest thing that jumps out, as far as we are earning interest on the money that we have at the financial institutions, whether it be Stockyards, whether it be Republic, and now with that, we're having a surplus monthly based upon our expenses. So, I think that's a very positive thing, and hopefully, I know we'll be getting some more expenses, but hopefully we can keep that going for a period of time. So, I think that, the finance committee had recommending accepting these financials. So, if anybody, have any questions, any comments? If not, I do think we need a vote for the full board to accept them as well.
So do I have anyone to, my brain just died. I'm sorry, y'all.
The committee has moved the acceptance of the financials. So
Thank
you ask for a vote on that.
Thank you. So can I have a vote on the October 2023 financials?
All in favor?
Or motion.
Yes, all those.
Like a motion, it needs to be a motion, I believe.
Well, the motion is from.
The motion came from the
standing
committee.
Right. He is
Okay.
motion.
So we just need all in favor, sorry. All in favor, say aye.
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 All opposed? The motion carries. Thank you.
And then Chip, Chip, from a standpoint from the advisor, do you have anything that you wanted to add? I know you've been working on some things.
William, I think you covered it. The main thing was the interest earned is a little over 120,000 a month now, and the business is not spending anywhere close to that right now. So it's just important to point out the positive cash flow for the business. I think in reading the minutes from last month, I reported that we would have a number from the Department of Revenue, and we do not have that yet. It's in Department of Revenue's hands to let us know when they have any analysis on the TIF available, but we don't have that yet.
But we've been staying in close contact with them. So hopefully,
right.
As soon as they have that, we'll have it.
That's right. Other than that, no report.
All right.
Fryer has a question.
Yes. Hey, William, Chip, are we any closer to having a budget?
Well, sir, what we want to make a budget is we want that TIF number. That's the big driver. I think the thing to focus on right now, as you can see in the information that was shared, you can see where your expenses are going. That's, just an idea of where your spending is going. So in terms of having control as a board, that's what would be good to pay attention to now. In terms of having a budget that accurately reflects what we think this program is going to look going forward, you just don't have anything to base anything off of yet until we get information from Department of Revenue.
So I understand that. I think the challenge with that in terms of managing my expenses is that's after the money is gone. And so the point of a budget is for us to be able to say, hey, we approve, at least generally, where this money is going to go. And while I know we're waiting on the TIF numbers, we are spending money right now. And I think that the board, as well as the community, has a right to be able to say, all right, what's the budget for the organization currently? and then we can talk about what next year's budget is or the year after that. But I do think that, we should be operating around what we are currently dealing with. And so it'd be nice if we could put together a basic budget, and it should be pretty simple because, again, if we're not dealing with large numbers and there isn't a whole lot of stuff going out, it should be fairly simple to put one together. I just think that that would be us doing well by our constituents and having a budget to operate by.
But then I hear what you understand, and I think that we've had the conversations, and I get what you're saying, but it's a little bit difficult. But I do think, Rita, you have put together as far as some of the things that we're going to be spending, as far as the expenses, because that's really the only thing that we have right now to budget for is those expenses. And if I Rita, you did put something like that together.
Yeah, let me just say that to your point, Lyndon, we are working on a budget, probably at a level of detail that would very much please you, and not just a simple budget. Laura and I are working with Chip with regard to a 2024 budget for the entire year. And so it is our hope to have that in place for the Finance Committee, hopefully in December, to take a look at. So we are working on that. We understand, what you're communicating here, but we're almost there. Continue to be patient a little bit longer through the holidays, and we'll be there. No expenditures are going out that aren't that everybody on the board can see, and what even the expenses are. So we're almost there.
Yeah.
Thank you for your patience.
You can see on a monthly basis what our expenditures have been, and there's no dramatic swing in those. But the thing to realize is that a budget for an organization like ours is going to include more than what is being currently paid to your contract workers. A budget is going to be a projection regarding how much you want to segregate in a money-making account. Also, how much you will segregate for investment in projects, how much you anticipate making for projects, and all of that is dependent upon getting that figure from the state.
Right.
That's the major holdup now. We can't do a full budget until we know what that number is.
And to what Laura just spoke to, like I said, man, any money going out being paid for anything, everybody from the Finance Committee and everybody on this board sees it at all these meetings. So there's no surprises for board members and there's no surprises for communities. But again, I do think we need to get a budget, and that is being worked upon. And I appreciate you bringing that up and keeping everybody focused on that.
Thank you.
Jennifer has her hand up.
I have a question, William, and pardon me if you said this and I missed it. I know that we were anticipating getting that baseline data back in October or November, given it's November 27th. Did you say the forecast of when they're anticipating that data will be available for us?
I said we in contact with them. I mean, it's really we can't get it until they get it to us. So the main thing is that we have great relationships with Chip, Laura, and Rita. So I do think as soon as they get that, they will get that to us.
Yeah, and Chip,
did they give us any other date? I mean,
Chip is in contact with the cabinet just as a matter of routine on a weekly basis. So that it's not that, well, they have communicated with us freely about when they're going to get the number. And Chip has talked to them weekly, if not more than weekly. They have just not been able to run it to ground.
Yeah. November 1st was their projection when we met with them in Frankfurt. So we're within the month. Today's the 27th. And so Chip is talking to them each week.
Thank you.
And that's really no different. Look here, man. When we were on the Arena Authority, we wanted that number yesterday. And it just take. I mean, you got to wait till they get it to you though. But I mean, they working on it, and in my opinion, based on the relationship that Chip has had, and based on the relationship that Laura and Rita continue to have with the cabinet, I do think they'll get it to us as soon as they have it.
I think I appreciate you raising that point. It is very this process and this program and this business are very important to the Department of Revenue. They understand the importance of information being made available as soon as practicable, and but Department of Revenue wants it to be accurate as well. It's a vast 13 square mile area to account for a lot of things for the first time. And what they don't want to do is make some oversights and then a year or two later try to correct. So I do know it does have their full attention. It's important to them as well, as there's a lot of visibility at the Commonwealth for this success of this project.
And quite frankly, if I didn't have the experience with the arena, let me tell you something. My first experience when I was going through it, I was like, "Chip, man, why can't they get?" I mean, I was impatient and I wanted it.
Yeah.
But at the end of the day, now look, man, they got to do their thing, and I promise you, they'll get it to us. That's just the experience that I bring working with them on things like this.
That's helpful. Thanks to you both for sharing that additional background. Thank you.
All right. Do we have any other questions? Laura, was I supposed to cover anything else?
There's one other item, and Amy is going to discuss that. That's the El-Home agreement.
Yes.
Hi, everybody. I hope you had a great Thanksgiving. I know Rita sent to you right before the meeting, and we do apologize for the very late notice. We just got any final comments back from El-Home at about 3 o'clock this afternoon. A draft memorandum of agreement for the tax lending project. And it's ended up as a slightly, and I'll put it this way, a bigger opportunity for the partnership than was originally envisioned, because it's going to allow what El-Home has asked for, and what we're presenting to you will allow El-Home to expand its reach a little further than simply lending the amount that we're required to lend under the statute, which, if everyone remembers, is the incremental increase between the existing tax that was owed in 2021 and the increase based on the annual increases. And really, we know that it's every 4 years that they reassess. But the difference between the 21 tax and the now is all that we have to lend. And the statute requires us to lend that at 0%. Well, what we have come to a tentative agreement pending your approval with El-Home is that El-Home will administer the program. We will jointly market the program, but we will fund it initially with $75,000, which is less than we're getting monthly in interest income on the $30 million in seed money. But for that, El-Home can fund the staff they need and make the loans that are needed to any residents who need assistance paying their taxes who qualify under the statute. And what that means is they had to have been a resident as of 2021. It can't be someone who's just come in and moved into the neighborhood. It can't be someone who has commercial property, that is renting out property. It has to be owner occupied. But on top of that, El-Home was concerned that, one reason we approached El-Home is El-Home was already making property tax loans in their service area, which includes our 9 neighborhoods. They were concerned that once this program ramps up and is advertised, that their loan pool would get depleted if they were only using our money to loan the additional increment and not for the underlying money. Their estimates is that the $75,000 they can manage the program, and they can treat the incremental increase as a full grant. that doesn't have to be repaid back. And then they can use our money to make the underlying loan, which will free up some of their other loan dollars to make small business loans in the 9 neighborhoods. So what this agreement does is we would be funding the entire tax bill for eligible taxpayers and not just the incremental increase. Now, it would be paid back at 0% interest, and 50% of that money would go back in the loan pool, and 50% of that money can be used by LHOME to fund other small business loans. So that's how this is structured. It goes beyond what we're required to do under the statute, but it is consistent with the board's mission of providing, funding for residential development in the neighborhoods. So I know that Laura, Rita, and I worked on this with LHOME. We feel good about this. We think this is very workable. We think it's fair to LHOME. And for $75,000 or possibly less a year, it's not a substantial outlay of board funding. Laura probably has a few additional comments as well.
One of the features also is to help each borrower to establish a savings account with a lending institution that's already partnered with LHOME, and it will help them to save up funds to pay their taxes for the next year, so that they are not being faced with borrowing money each year. And that's also a significant provision of this agreement. I think everyone knows that one of the apprehensions and then possible criticisms from residents, longtime residents, was that as their property value went up, their taxes would go up, and that they would be behind the 8 ball trying to pay their taxes each year. But this agreement actually addresses that concern, and it prevents it from happening. We're very happy to be partnering with LHOME, since they have been making these types of loans in the past, and this just gives them an opportunity to put it on a grander scale. Now, since we just got the information, the yes back from LHOME this afternoon, and you've just received the document, some of you may not feel comfortable waving your hand over it and voting on it this afternoon. But what we can do is to have a special call meeting next week, just for the purpose of voting on this document, up or down, if you are feeling a little uncomfortable about voting on it this afternoon. But let me tell you that Amy has represented us well, and LHOME's attorney also represented their interests well, and we were all from the start at the same place, and that is we wanted to provide this service in the best possible way to the residents without causing them any harm, and literally without making any money off of it. We get our money back, but no interest is charged. So we really do believe this is a good outcome.
No, I definitely agree with you. And then I agree with your assessment as far as letting the board members, take a look at it, not voting on it today and taking calling a session. But I want to ask Amy, I just want to make sure, we're looking at this. It doesn't look like that because the partnership doesn't look like we have any, is there any risk that I see that we have that in this looks like we're pretty well protected? And then I was just wanting to also know, hypothetically, if an owner does not pay the loan back, and who handles that? It's like, typically when you have a loan against something and you don't pay it, they can take the property back. Will it be us taking the property back? Will it be LHOME? I don't want to be associated with that. If it gets like that, how is that spelled out?
That is all up to L Home, how they choose to do it. That is not, we have delegated all of that to L Home. And L Home has the discretion in this, and we're gonna, of course, it's built in that we have to meet annually and go over, you know, all of the data. They have to report to us. They have the discretion to write off loans if they want. Their existing loan program, now it's smaller than this will probably end up being. I think their default rate was less than 5%. So they haven't had a very large write-off of loans. And so they have not been, you know, foreclosing on these property tax loans, which
That's right.
none of us want
Yeah.
in this situation. So if we track it and it's a rate that is that small, you know, the amount of money that it would take out of our pool is still so small compared to just even the interest we're getting. It's something that I think, you know, as we monitor this, the board can say, yeah, we're fine with this just being written off.
Yeah.
But that's all on L Home.
But one of the reasons why we wanted to partner with L Homes was not just because they have been in this business before. If you look at their records, they do extensive lending counseling, and they are extremely liberal in renegotiating the lending agreement with each of their borrowers so that their rate of default is infinitesimal. They do not go after people to try to get the money back. They work with each client, even after the agreement is signed, if the client is in trouble, to redo the terms of the lending, to stretch out the amount of time or whatever, so that it's much more likely that the client is going to pay the funds back. So again, the amount of money that we are putting into this is $75,000 annually. That's the amount right now. And that, again, is a small amount based upon even what we're earning off of interest, as Amy said. And we're doing this with an entity that has the best interest of the borrower in mind.
Yeah, Mr. Pryor, I see you've got a question.
Yeah, well, just a statement. I mean, I appreciate all of that, and I love L Home. We work with them a lot. They do a great job. I do think, though, still it would be in our best interest to get something up front to talk about how folks who default are going to be handled, so that we know and the board is able to approve on the front end what that's going to be like, and that we're not just leaving that up to L Home, because L Home is great now under Keith, and they're doing a great job. But leadership changes, policies change. We need to make sure that our residents are protected in the way that we feel is best. So I would just encourage us to some sort of outline for how this is going to be happening, and whether that could be flat out us saying like, hey, these defaults are going to be off, or saying that we're going to engage in a conversation as they develop a policy that would be subject to board approval. Whatever it is, we can be flexible, but I do think that we should have some measure of say on the front end as to how this happens.
Now, the document that you have in front of you provides for periodic meetings between the partnership and L Home regarding the lending contract, so that we will have an ongoing opportunity to address issues as they arise. And they understand why we're doing that, because we do not want the borrowers to be behind the 8 ball. And they also want to address issues as they arise, rather than letting a year pass and then trying to do it when it's time to renew.
But it would be, they've been so cooperative on this, it would be very easy for us to insert a sentence saying exactly what you said, that we will, you know, we've got in the first year a 6-month check-in about, to make sure we're all on the same page about the amount of lending and how it's going, and to make sure all of our expectations are still in line. And we could add at that 6 month that they will bring to us a proposal of how they plan, based on what they're seeing with the loans, a proposal of how to deal with defaults, and that has to be separately approved by the board. I think that's easy for us to add and have in there by the special meeting for you all to vote
Yes.
on.
Yeah.
I think that is perfectly fine. I would be more than happy with that. I did have an actual question though, which is, who will be responsible for facilitating the process? Is that 100% L Home, that people will go through L Home to get into the loan program, to apply the whole 9?
Yes.
Okay.
Yes. And of course, we will be involved in helping to advertise this and work cooperatively with L Home. And as we get calls, because I know Rita's already gotten some calls, we will direct them to L Home for an application.
Mhm. I think that we mentioned in one of the finance committee meetings that we have had an opportunity, representatives from L Homes and us, to talk together with folks in the sheriff's office. The sheriff's office is, their mindset is they want to cooperate with both of us to facilitate any of these lending agreements that we have with individual borrowers. And the extent of their cooperation will even be to forgive certain back penalties and fees which may have accumulated for some of these borrowers, to make it easier for them to qualify, and so that they can borrow money through this process. So I think that's a major breakthrough there, the level of goodwill that we have with the sheriff's office and their interest in making things as smooth as possible for the folks in the neighborhoods.
I think that is great. I'll just add, it may be worthwhile for us to re-engage the what is it, the PBI?
Yes, we've done that.
Particularly around marketing, because they may be able to help us get something out to all residents, let them know about this program. I think we've got to be proactive in making sure that everybody's aware that this is a resource that's available to.
That was part of the discussion as well. They've apparently already completed their mailing that's going to go out for this year. So they can't add us to a mailing, but they have agreed going forward to do just that. They've also said that they will agree to include on their website reference to this lending program, so that folks can, if they're going on the PBA website, see information there that will direct them to L Homes. If there are public announcements or any kind of when we start the public information campaign, they want to be part of that too. So this is like everybody who's involved with the tax bill is on the same page and wants to be helpful. Yeah.
Let me ask you something. Who else would be capable of doing this?
Well, it would.
Good question.
Yeah. When we first started looking at our obligation under the statute, the one thing that was top of mind for us is, why should we have to reinvent the wheel? If there's an organization out there that already has a good track record, wouldn't it be better to partner with them and to enhance their capacity so that they can do more than they are currently doing? And L Homes is that entity. The folks that they are serving, the majority of the loans that they make are in our area. So it just made sense for us to work with them. I'm frankly not aware of anyone who has this kind of lending program for taxes other than L Home.
So that's what my thing is. That's why I don't know of anybody either. So I know we're enhancing their capabilities. So is there a penalty for them if they hypothetical? I don't know, like Linda said, leadership change, where they say, I don't want to do this anymore. Is there a penalty in that? I mean, so they can't walk away and leave us high and dry? What is it?
They're locked in for 5 years
Okay.
with this.
With these terms.
Yeah, they're locked in for 5 years.
Gina,
Yeah, Ms. Dunlap, Gina, I feel like I'm being so formal today.
Thank you, Ms. Covich. That last question that William posed was one of the questions on my list. There's a reference to the term and successive years, but I couldn't find the actual term or the expected term of 5 years in this agreement. So when you say they're locked in, I just didn't see the language that said this was a 5-year arrangement.
Yeah, under paragraph 1, it has this MOA will commence on the day and date stated above, basically when we sign this, and will continue uninterrupted for 5 years, after which we may renegotiate.
I see
And
it
then,
now.
yeah, and then in paragraph 4 is where we have on each 30 days prior to each anniversary, we're going to revisit and see, check out the money, has it been so successful in getting loans paid back that we don't have to give a full 75,000 in the second year? Are we going to have to come to the board and make it 80, to readjust it, since this really is new for everyone? But the plan now is for 75,000, both for staffing as well as any staffing they need. They don't think they're going to need any additional staffing at first, but they can draw on this if they need it, as well as the lending itself.
Thank you. That's very helpful. So in terms of the property loan program that LHOME already has in place, I'm assuming that loan program is maybe extended to maybe a larger population than what would be required under this particular loan pool or fund. And so I'm assuming they have a whole set of policies and procedures that accompanies their program, but I would imagine it need to be modified somewhat to maintain compliance with our requirements. So has that come up or been addressed?
Yes, we have those discussions with LHOME. Their current program is open to all of the zip codes that they serve, which is different than, it includes our 9 neighborhoods, but it's slightly broader. It goes around through the south end as well. So they know that this, and they also charge interest at, it's a fairly low rate, but they charge interest and they have to qualify people for the loan. So there is some loan underwriting that is involved. It's not like when you're getting a mortgage on your house, but they do some qualification for those loans. They know that for our loans, there is a statutory requirement to grant these loans, so they won't have the same underwriting. So if someone qualifies under the statute for this loan, using our money, they're going to make the loan. And they're going to keep the funds segregated. They're going to report them separately, both for their compliance and for our compliance, and keep all of that separated off. There may be some taxpayers in our 9 neighborhoods who technically don't qualify under the statute. So LHOME can lend to them, just not using our money.
mhm.
So can you give an example of somebody in our development area that would not qualify for a property tax loan with the incremental increase?
Someone, let's say they bought the property in 2023, a new person who moved to the neighborhood and who may be having trouble for whatever reason, they could still get a loan from LHOME, but it would be under their traditional program, not ours.
Right, for lack of residency for a sufficient amount.
Right.
Okay, awesome. And so, does the partnership, I guess, have in its possession a copy of the existing loan program policies and procedures so that we can reconcile which portions of their existing program do not apply to potential borrowers based on the partnership and its obligations?
I'm trying to remember. I think that may have been in some of the materials that we went over the first time with the
Yeah.
L home. As
I
far as
only asked because in response to Mr. Pryor's question about, the response was we're delegating everything to L home. So I would just appreciate knowing exactly how they do this, and then
Right.
also understand the tweaks to what they do to accommodate people that are coming because of the partnership. It's hard to, like, you gave a great example with residency, whatnot, but you said there's also some underwriting involved with what L Home does, but that won't or will maybe not apply to partnership borrowers. But
For our clients, it would only be the residency requirement. And in truth, the controlling document is this agreement, not L Holmes's established policies and how they do their general lending. What controls is this document, because that's what.
Understood.
But if it would be helpful, we can ask them if we can get a sample copy of their existing application. I know they have not, until this is signed, they don't plan on doing the modified application they would use for this process, but I can surely ask Mr. Talley for like a copy of their existing application and any informational material they give to people who are applying for those loans.
Awesome. Thank you. Another question. The loans, are they going to be secured with a mortgage?
No.
Okay, so it's just a signature loan or a note.
Right. Yeah, no.
And no interest.
Right. So that takes that should relieve some fears that lack of repayment might cause somebody to be foreclosed on.
Right.
Because if they're not taking a mortgage, they will not be foreclosed upon.
That's exactly what we don't want to happen. Right.
Okay. And then I'm still grappling with, because I just opened this document, I'm still grappling with sort of how the funds pour in, the $75,000. There's mention, I guess in item 2B, that some portion of this is being treated as a grant, I guess, to L Home, which I think is, what is
that is meant to say that L Home can treat the incremental part as a grant and just give people the money for the increment and not ask for repayment. Now, if they use our money to ask for repayment of the underlying tax bill, then they can lend it at 0%, but they need to ask for repayment. That's what that grant language is meant to allow for.
So,
but is that because they have a certain need, like what's the word that I'm trying to use?
Our legal obligations to cover the increase.
Like an economic reason for why they wouldn't repay. They have to meet some benefit, you're saying? Are they going to communicate that?
Yes, that will be worked out with us as they start the program and see who they're getting applicants from.
But I'm saying anybody who borrows money for covering the increase in their tax bill, none of those people will be required to pay their money back.
The way this is drafted, yes, we can do that.
So it's a bit, disconcerting to call it or refer to it as a loan program, because the only portion that they're going to be required to pay back to L Home is if they borrow money against the pre-existing balance of the pre-existing amount.
Right.
So this is a property tax grant program.
Except that L Home can use some of the money for their loan program.
Right.
They can.
I mean, it's a blended program. It's a blended program, though. You're right, and we'll have to be careful how it's communicated.
I mean, like in terms of messaging and community engagement.
Yes.
And just understanding, absolutely, because I still have to admit I'm not clear today, right?
Yeah. Which is why we didn't want to ask you all to vote, because you just got it. This is a dense document. For a 4-page document, there's a lot in it.
Yeah.
And then my last comment, I guess less of a question, but a comment for the portions that LHOME is authorized to direct into its other lending programs. I've heard you made reference to them using those funds that originate from the partnership to make business loans. And I find that troubling, given, but I would think it would make more sense if LHOME used our excess funds to fund their homeowner loan program, right? Because this is about property taxes to maintain home ownership and keep people in their homes. LHOME makes loans to homeowners for things like, deferred maintenance and other repairs that they're not able to get from typical conventional banks. So to me, it would be more aligned to allow them the opportunity to shore up their home ownership lending program, as opposed to directing those funds into business loans. And that's all I had to say.
Yeah, and I will just so everybody knows what Gina was referring to in paragraph 6, where LHOME has the obligation, to go out and to get as much money back as they can on these underlying loans, even though they're going to be at 0% interest. And it is set that all repayments by borrowers will be divided 50-50. 50% would go back into the lending pool, and 50% could be put by LHOME into their other programs, so long as it was only used in the 9 neighborhoods. Now, so it's not just business, it would be any of their programs, the way this is currently written. If it's the will of the board when we vote, I don't think LHOME would object. If we wanted to limit that to only residential lending programs, that is certainly your prerogative to do that. Yeah, I think Mike was next, and then Dr. Wade, then Mr. Pryor.
Sorry, I lost my mouse. So section 5, partnership will pay lender an annual fee of 15% of the total loans closed during the prior year. So is that just an origination fee that's paid the first year, and that's not an annual on the balance of all loans outstanding?
Yes, it would be just an origination fee for just the prior year.
Okay. I'm wondering if 75,000 is enough, and if we're covering the entire tax bill, like that's only like $175,000 houses. But on the flip side, if nobody, or if all of the money isn't used, is there a clawback, or does LHOME get to keep it? Like what happens with the unused funds?
That is a good point, because I put in a balancing of essentially, each year we'll discuss and see if we need to fund it less, more, but it actually doesn't address what happens at the end. So we'll need to put in here a clause that at the end of the 5 years, if we do not jointly renew the agreement and negotiate a renewal, that any unused funds in the lending pool would need to come back to the partnership.
Okay. And then as far as repayments, if the homeowner doesn't repay, that's totally on LHOME. Is that?
Yes, and that 50-50 split should incentivize them to work as much as they can to get as many repayments as possible. Yeah, within whatever parameters we set for what they can use, because they're going to get 50% of that for other programs in the 9 neighborhoods or other residential programs, if you decide to add that limit that Gina suggested.
I think that's all that I've got. Thanks.
Okay, Dr. Wade?
2 questions. The first one, is it possible for them to give us a couple of use cases with how it works that would show you know, a typical use case of someone needing to get that. So we see what that math looks like from that perspective, and then what would happen at repayment or what would happen with non-payment. Does that preclude them from getting it in subsequent years? Something of that nature. And then if they can potentially outline for us what would be the contingencies that would maybe allow, so someone doesn't have to pay that back, so that you don't, you know, is it past a period of time or what that might be? Because I think that would aid in even communicating that aspect, so that maybe people don't become delinquent when there are the options and things like that. So if they could potentially provide more information that will incentivize people to do the program for that, if we can communicate that part.
Yeah, we can ask, and going back, I know I had said we would ask them for, you know, sample applications. We can get that information too and see and get kind of exactly like you said, some use case scenarios of, you know, not an actual, you know, client that they're working with, but some abstracted typical situation, both of how normal repayment works and how it might work if someone's having difficulty repaying, and how that process works out.
And I say that because I think like if we are aligning on that sooner before the vote, I think that maybe can give us more confidence of what the rules are versus setting them after it's been kind of communicated from that perspective. I think that would be amazing.
Okay, thanks. Mr. Pryor, you had another question? Or maybe his hand is
I think he just forgot to take his hand down.
Okay.
Anyone else have any further questions while we're here today?
I do have one quick question. In order to qualify for the loan, do individuals have to meet the qualifications for the tax credit that they will be eligible for that same amount?
Yes, though the way the statute's written, they don't have to actually apply for it.
Okay. But they have to be eligible. But the eligibility is the same.
It's the same.
Yeah.
It's the same.
I'm sorry. Are you all able to hear me now?
Yes, we can hear you.
I'm sorry. Yes, I did raise my hand again. My question or question / concern actually, and Mike somewhat addressed it, but he didn't ask it explicitly. How are we certain that 75,000 is enough? Do we know what the number is in terms of increases and how many people? I mean, we should be able to get that through the PBA, but how did we determine that number, and are we certain that we have enough?
We are not certain we have enough. This was an estimate provided by LHOME based on historical information they've got and their information they have gotten from the PBA. It's also why we've got a 6-month in the first year, while we're going to meet at 6 months and 12 months to see if that's actually, you know, is that 75,000 the right estimate? I mean, this is such a new process that they don't really know right now how the community is going to come to this. You know, is it going to be taken advantage of or not?
Yeah.
So some of this, I mean, I don't want to say it's guesswork. It's an educated estimate, but there is an amount, you know, a certain amount of play here with the number, because this is a new and fairly unprecedented kind of program.
And as was said by Amy, we were concerned about the amount. So we double checked that amount with LHOME. And that's why the 6 months checking, that's part of the reason why the 6 months checking is there. But one of the things to keep in mind as well is, remember that this loan is available to people who are living as owners, occupying a home in one of these 9 neighborhoods as of 2021. And the figure that we have gotten just regarding owner-occupied home ownership in West Louisville is much smaller. That's a much smaller population of people than we had assumed it was initially. So, but again, there's a mechanism in the agreement to do a check-in, and if necessary, to up the amount of money that's available.
So this prevents us from putting too much money in the pot, basically.
In the first
More
instance,
conservative number.
yeah,
correct?
yeah. And again, the feedback from L Homes, though, is they think that it's plenty.
Yeah.
Based on what their lending experience has been.
I guess the only caveat I have to that is just kind of based on Gina's question or comment with regard to this being more of a grant program than a loan program. And so if this is funding that by statute residents are entitled to, then that kind of changes the game in a whole lot of different ways. And we shouldn't be making it reliant upon or incumbent upon them to seek this funding as much as we should be proactively trying to get them what they're entitled to. And that just may change the map.
And think about the lending amount. The statute focuses on the increase. That's part of what's been factored in here too.
Yeah, and there's nothing in here that prevents us from checking in. You know, if they get 2 months in and they're like, holy moly, we need more money, that, you know, we can always amend the agreement or amend the amount through a written addendum executed both by us, you know, as the board and L Home. I mean, some of this truly is, this is our attempt to just get it started and see where we go.
Yeah.
Yeah, I think it was Gina, then Mike, I believe.
Yeah, so it's my suggestion is related to the last point. If we've laid out, say, a 6-month review to see where funding levels are, I would strongly encourage us to reduce that to like 3 months. And that's partially based on, you know, how the tax payments work. So for those who are paying their tax bills now, they're getting a discount. Between December and January, they're paying the full face amount. And then once you get past January 3rd, I'm looking at my tax bill now, there's a 5% penalty. And then beyond that, there's 10% penalty. So your tax bill increases between January and April. I don't know how that factors into L Home's policy. I don't know if late penalties are considered part of the increase or the base amount, but notwithstanding all of those details, more sense to set an expectation after 3 months to check utilization as opposed to 6.
I think, yeah, there definitely will be no objection on their end if we want to make it a 3 and 6 month check-in in the first year.
Yeah. Now, part of what they did tell us, though, is that they thought it would be more beneficial to both L Homes and to us if we had a record of use that we could really study to see what the demand was. And they suggested 6 months as a better opportunity to gather the data to see how things were trending.
Yeah.
They were a little apprehensive about making it shorter.
Yeah, but there's no harm in us getting together at 3 months.
Yeah.
At all. And, you know, we'd initially put in here monthly reporting as well.
Yeah.
And they're like, we're not going to know anything monthly. You're going to see better trends quarterly. So we backed off their reporting to quarterly. But, you know, I think it's not a bad idea to at least have a check-in with them after 3 months of work.
Yeah. That wouldn't be a problem to do.
And is there a treatment for people that are into the penalty period? So for those people who are paying a 5 or 10 or higher penalty on their taxes, say they don't find out until March that we even offer this, how is the penalty that's due on their tax bill is that considered part of the incremental increase or part of the baseline tax bill?
That is a good question of how they would allocate penalty, since it is a percentage of the entire bill, and part of that would be the increment. So that's something we can get clarity from Elhome. And if we want to designate how they deal with penalty, we can in this agreement.
Yeah.
Okay, Mike?
So I was gonna suggest a 3-month term as well, or check-in. My concern with the projections are, I don't know how long Elhome has been doing this and what data set they've got.
Oh my God, son.
But we've not had a jump in property taxes like we have in the past 2 years.
Right.
So I don't know that trend indicates current conditions or future. Concerns there, and we need to make sure that, this program flows well. And, whatever, I know we're attempting to outsource it and, keep it at arm's length, but we're still responsible, and, the community is going to hold us responsible if things don't go well. Just the same, if I ship a package next day and it doesn't show up, my customer doesn't blame UPS, they blame me.
Right.
Yeah, we understand that. That's part of the discussion that we had with Elhome.
Yeah. And it was just put in a reminder was just put in the chat that the sheriff's office has agreed to waive the penalty for our residents who qualify here anyway, but we'll nail that down as well on the penalty aspect, that is not just an idle promise, that's something that we can count on, that's going to be waived.
Well, and also figuring out, who's eligible for a grant and who doesn't have to pay their stuff back. Because if there's any whiff of inequity there, people feel like they were treated unfairly. That never goes well.
Yeah. Any other questions? Okay, awesome. And thank you all for the great discussion.
I don't think we got it from the finance committee. That's all we got, Laura.
That's it. Thank you, sir.
Okay, so I believe that brings us, Mike, did you have another question? I'm sorry. Okay, I believe that brings us to old business. Any old business that needs to be discussed? Anybody? Okay, having none, that would bring us to new business. Any new business? And doesn't seem to be any. So that would bring us to.
Mary, excuse me. This is Lyndon.
Hey, Lyndon.
Hey, I don't know if this is old business or new business, but it's just a general question. I know 2 meetings ago, it was brought to our attention. We had a general conversation around the process by which particularly companies. I think at that point it was the snack company that's opening in the West End was raised as an example, but companies coming to WEOP with potential proposals for funding or assistance and that sort of stuff. Has there been any further conversation around that, or are we going to move to a place of kind of full-fledged discussion around what that process would look like and what that would mean?
At this point, our attention is focused on those 9 neighborhood meetings.
Okay.
That's what we have to do.
That's perfectly fine. So that means if anybody's coming, and I say this as somebody who knows, particularly with the mayor's economic development conversations and others, that folks are throwing out WEOP as places to go, right? Companies, organizations, and whatnot. And so right now, then our position is we're not taking anybody. We're going to deal with our community conversations and this loan stuff first, and then we will get around to that. Is that our formal stance?
What we have been saying is we're obligated under statute to base all of our community development projects on the feedback from people in the neighborhoods. And until we get that feedback, we don't have guidance on where we want to place our funds. So the priority now is getting that feedback. As we get into the feedback from the neighborhood, we can then start talking as a board about what our standards will be and what we're looking for in terms of development. But it's not possible for us, before we get that feedback, to make a decision that we're going to make a financial investment in any neighborhood or any project. And that's what we've been telling our contributors. That's what we've talked to the state about. That's what we've talked to the mayor's office about.
All right.
And that's what the statute says.
Yeah, we cannot get the cart before the horse.
That's fine. You all know most people don't know what the statute says, and so that doesn't stop them from asking the question. So I want to make sure that the board is informed of how we are officially positioning ourselves, so that when we are in spaces where these conversations come up, or when board members get asked directly, that we are able to all make sure that we have the same message that we're giving to everyone. And I assume that's what it was, but I wanted to ask for clarification.
Okay.
And to Linda's point right there, man, I really think that once we get questions, there should be one spokesperson. That should be Laura. Everybody gets questions. Say, hey, man, we getting information we from the different districts, but then hey, give them the number to our president CEO so they can hey, they may have something good that, to meet it, that we need to be in the community. So if they have a question, they got an idea, they could live in the community. I don't know. So I would just forward that, get that information, because that's really would be good interaction, in my opinion. And it's to make sure that they're hearing the same things too.
William, if I may, I would tag on to what you said, is that with all due respect to this entire board, if nobody else knows what the statute says, the board members should have some understanding of what the statute says. And if we don't, we need to be raising those questions to get help in understanding that.
I agree with that.
Okay. Lyndon, does that help answer your question?
Yep. Thank you.
Oh, no problem. All right. Anyone else on the new business or old business, or not sure new or old? Okay. Then of course that will bring us to our public comments. So if we have anybody who is online, because we're all virtual, that has a comment, Rita, can you check and see?
Yeah, I'm looking now. We have 7 attendees. I don't have anybody with their hands up, but I do notice, and thank you, Melody. Melody Humphrey is on, as she always is, from the PVA. So it was great that she captured that discussion with regard to the PVA. But nobody else has their hands up online.
All right, sounds great. Then that will bring us to our open board discussion. Do I have anybody we discussed a lot today. Anybody have anything else we need to discuss? Please say no. Okay, great. All right, so then that will bring us to our next board meeting. You can see that it will be January 22nd, 2024. Everybody make sure you mark your calendars, and we will be in person. Is that correct?
Yes.
All right.
Now, for the special board meeting, as far as approving this L home, will
No,
that be in person?
No, it'll be virtual.
Okay.
Okay. If that is all, anybody else, comments, questions, concerns? If not, we find ourselves adjourned. Thank you so very
Thank you,
much.
Dr. Milliner.
Thank
Thank you,
you.
everyone.
Evening.
Mhm.
Good evening, everybody.
Bye-bye. Happy holidays.
Bye.